Breaking bank-to-bank runs. The Fed interest rate is cut once again since 2018. Fed repos started, and the crash is here, and how I'm going to profit. Hey, gang, this is Mike with MrNoFluff.com. I got an exciting episode for you guys, live packed with information. I don't know if you guys believe it, but I'm going to show it to you. There's a bank run, but it's not the people going to the bank and asking for money. It's bank to bank runs because banks are not liquid. What does that mean? They don't have your cash because they don't not only have your cash, they don't even have cash for business operations, and that's why there's a bank to bank run, and the Fed has came in and done a repo, okay, to help out the banks. But now it's kind of confusing when we talk about repos. For example, if you have a car and you don't make the payments, when we say repo, we understand that the lender is going to come take your car. So to the normal person, a repo means that your collateral or your possessions are going to get taken away. Same thing what happens in a foreclosure. They take your home away. What happens in a car, they repo your car away. But when we're talking about the elites in the world, when we're talking about Federal Reserve, when we're talking about the central bankers, that repo to them means that nothing's getting taken away. Repo to them means that they're actually going to get money from us. They're going to get money to be bailed out, like the last crash. But in this case, the Fed is giving bankers money. So in this case, when we say the Fed is repoing, they're not taking away any bankers' possessions or collateral. In reality, they're giving them money. And I'm going to show you proof right now, ladies and gentlemen. Now, that sounds really, really crazy, right? The banks, why would the banks be giving out money to their friends, the other banks? Okay. Well, here's the news from CNN, so you guys don't think I'm fluffing this up. Okay. It says that the Fed just for the second time repoed and give $53 billion to the banks. Now, we don't know what bank it is because they're keeping it a hush hush. Is it Bank of America? Is it Wells Fargo? Is it Chase? Which bank is it? Because there's multiple banks for them to want to not have liquidity, and they have to get $53 billion. So the Fed is not advertising what central bankers, what lenders they're bailing out by giving them liquidity. Okay, they're keeping it a hush hush, but it has to be these bigger banks that are too big to fail. But it's speculation on my end. But I think eventually maybe they reveal it, maybe they won't because the Fed has never been audited and they like to keep it secret. I do want to show you another one. Here is NBC. Okay, the Fed runs repo Tuesday. This is the second time, and what's happening is again the banks are using fractional reserve lending, and they don't have the reserves, and they have to have a certain amount as a reserves or face penalties, and usually the banks borrow between each other to cover some of their expenses, maybe their overhead, maybe their taxes, maybe new lending. Just kind of like majority of Americans borrow from a credit card till they get their paycheck to pay off. The same thing happens here. Majority of these banks don't have all the cash for all their liabilities like the overhead, the income, the taxes, payroll, lending out. So they usually borrow between each other. And now the interest rate for this has gone up to all time almost 10% versus 2.5 because the banks are now lending to each other for short term. This is not a long term loan. This is a very short term loan. They're not going to give each other money like being allowed to be put on a credit card for the average consumer. Well, the banks, when they need a little extra money, they borrow from their cousins or from their family bankers. And for a modest interest rate of 2.25%, they can get a short term loan while more money comes in, right? But now banks are now lending to each other, maybe because the other bankers are insolvent, they're not liquid. Maybe they realize that the banks they're going to lend to, even on a short-term basis, are not going to pay their money back, and that's why interest rates are at all-time high, guys. So that said, let's go back to the Fed cutting interest rate. Now, before we continue on, just want to take a couple of minutes to do some house cleaning. Guys, you can support this channel by supporting yourself. Okay. How can you do that? You could join my profit sharing coaching for less than $1,500 a year. I work with you one on one for us to do deals in your backyard. Or if you just want to get access to my top selling courses, my best courses like the Mother course, like the VA, and 15 other courses, they're hours of training, okay, for just the low price of $67 a month. That's one way you can support the channel and support yourself. You'll get unbelievable creative education that no one else is talking about for just pennies a month, guys. Okay. Better yet, why don't you join me in my REI Investor Internet Club? It's just $1 for your first meeting, and after that, it's just $25. Or you can sign up for a 6-month plan, or a 3-month plan, or a yearly plan, and even pay less than $25. So go check it out, guys. And last but not least, definitely join me in my community. It's totally for free. You get to meet other like-minded entrepreneurs, gold investors, real estate investors, cryptos, etc., and we could all network. Now, going back to the story, we know, well, at least I say we, because I'm assuming you guys have been listening to me. I know for a fact that the economy's in trouble. Okay, the president was saying this before he became the president. Now he's singing to a different tune. So I don't care what the news says. I know what the reality is, that we are having major freezes happening in liquidity in the banking sector. We're having major debt from the federal, state, corporation to the individuals in America. We're having nations in the verge of defaulting to the IMF lending. You already see that happening in Argentina, other places. We're seeing civilized economies, top of the line economies like Canada, like Germany, like Great Britain, coming to a stop or a depression. And we are seeing now the Federal Reserve cutting the interest rate so low that we never had it in the history of America at 0% almost, guys. And they now just cut it again. So these are clear signs that there are troubles that are not being forecasted by the Federal Reserve. They're not being forecasted by Bank of America, Wells Fargo. They're not being forecasted by reporters, by agencies, that we're in major trouble. We have tariff, we have sanctions, manufacturers been hurt significantly, and real estate has slowed down, even though that interest rate are extremely as low as they ever been in the history of the world, in America, I should say. And people are still not buying homes like they used to. Loan applications have dropped, and more and more people have to put their house on the market and wait a longer period of time before they're able to sell the property. So this brings to the crash is here, guys. The crash is here. They're just not telling you about it. I don't know how else to sound the alarm bell. This is my opinion. It's not financial advice, but it's here, right? It's here. Now, you can go and follow statistics, or you can just go and listen to the heartbeat of the street. I do both. And from listening to Heartbeat of the Street, I can tell you that I have students that have 2 jobs, 3 jobs, and not making ends meet. They have college degrees and nice degrees from nice schools. I can tell you that inflation is just so crazy up. Every time you go to the grocery store, prices of things, if you buy the same thing over and over, 3 years ago till now, has increased. And as you can see, job markets are shittier. Government agencies are manipulating the numbers. If people stop looking for work, they don't even consider them in the unemployment. So there's been a lot of manipulation. There's been a lot of manipulation from the governments. There's been a lot of manipulation from central bankers. Wells Fargo just got busted, or their employees got busted for manipulating the metals market. which is the whole different story that I'm going to do about. If you guys are interested, leave a comment. But one thing is crazy, guys. I've owned many businesses. For example, in my moving company, if my mover assaulted or raped or stole something from a customer, then I am personally reliable for that contractor. I'm personally reliable for that employee. Okay. Now, but if you look at the elites, again, the banks, if Wells Fargo employees are manipulating the metals market, which that many banks have already been busted. I'm not sure it was Wells Fargo. I think it was J.P. Morgan, if I'm not mistaken. I'm freestyling this guys right now. If their employees are getting f- criminal charges for manipulating the precious metals, why is the bank itself not being charged as well? Because if you own a construction business, you own any kind of business, you're responsible for your employees. And I just find it very, very odd that, you know, in with the elites, the employer is now responsible for the employees. What I think is really happened, and this is speculation, is of course that, these employees were doing what the employer wanted them to do in one way or another. Uh, Maybe not in the memos, but in the water fountain speak per se. And they're just the ones that got caught holding the bag because the big companies, like the bank, is too big to fail. Same thing has happened with the repos because why are we, I say we because the more the Federal Reserve prints money, the more they give out money. What that does is makes my savings diluted. It makes inflation kick in. So that's why I say me, because when government mismanages money, when central bankers mismanage money and they lend out, that really affects me, affects you, affects everyone that you know, and even your kids and even your unborn kids. Sounds crazy, but that's the truth if you really think about it. Okay. So why is the Fed repoing or giving money to big banks that are too big to fail? Because the same reasons we bailed them out in the last economic crash, guys. Either way, we're going to pay for it till we get away from central bankers, till we get away from government and control of money and freedom, just like we got away from uh, the state and religion. So as soon as we're able to separate the state and religion, we had so much better country versus what we had in Great Britain. That's why we had our independence with many other reasons combined into one. So guys, thanks for watching. Click the like button, share this message, support this channel by supporting yourself. Okay, get into my profit sharing, get into my academy. $67 a month. This is a $3,000 course, and you're just getting it for $67 a month. There's a limited amount of seats before the sale expires, so don't wait around. Hustle and bustle. Don't take no for an answer, guys. See ya.